Paul, I want to first get your take on the SEC case, maybe not as a judge, but just as someone who watches crypto. How important was it that Ripple won at least part of that case?
So I think it was actually pretty important because any step forward towards clarity is a positive step. And I think if you look at the draft legislation that's coming from Congress, it's very, very reasonable. And so all of these things, I hope, are converging towards pressure towards we should have more clarity of rules. And I think what Meltem said in your introduction was fantastic. She's right on target. Clarity is good for business. And hopefully between the legal decisions and the pending legislation, we're getting there in one small step at a time.
Okay, so as we talk about the pending decisions around what is and is not a security, also all waiting with bated breath each and every day to see if a spot ETF approval actually may come, or Grayscale may actually have its ruling come down in the D.C. Circuit Court. Didn't happen today. We'll see if it happens on Friday. So we'll all wait for that. In regard to ETH futures, though, and that potential ETF, that one seems like it maybe is more likely. What real difference would that make, Paul?
So I think it would make an enormous difference because we're really starting, and your prior guest was amazing on this topic, we're really starting to see the difference between Bitcoin, which is a kind of digital gold, and people want to see it as potentially an inflation hedge or a global asset, versus Ethereum, which is becoming a global computing infrastructure. And so by having ETFs for the two separate ones, and specifically having Ethereum ETFs, you can start to sort of take a stake in the Ethereum ecosystem, in the cash flow of transactions, in the value of the overall asset infrastructure that's being built there. And for people to see these two properly as separate, I think it's really important for the development of the overall marketplace.
Okay, so on the subject of Ethereum, you are a somewhat expert on the subject. You actually just wrote a book that was released earlier this summer, Ethereum for Business. It's called A Plain English Guide to the use cases that generate returns from asset management to payments to supply chains. Paul, how should businesses be thinking about using this technology?
So we have a very simple saying at EY, which is that we believe blockchains are going to be the glue that tie business ecosystems together. And even though everyone tends to focus on finance and DeFi and SEC rulings, in fact, Ethereum is an incredible infrastructure for tokenizing assets, tracking supply chains. If we look at the kind of things that I talk about in the book and that we're doing at EY, they are tokenizing carbon offsets, tokenizing carbon traceability, tracking pharmaceuticals, managing procurement agreements, right? There's a tremendous amount of operational business stuff, none of which is finance related, but is essential for how companies interact with each other. And Ethereum provides a neutral, decentralized infrastructure in which enterprises can transact with each other on level, equal terms.
On the subject of things being level, is this a zero-sum game, Paul? Are we going to head into a world where one chain actually is dominant, Ethereum perhaps?
So I do believe that. I think if you look historically at the world of computing infrastructure, we like standards, right? Basically, a single operating system represents 90% of all PCs. Two operating systems represent more than 95% of all phones. We like standards. Standards scale really well. So I think we are headed for a global infrastructure where Ethereum is a global base layer standard for digital business transactions in the same way that TCP/IP is a global network standard, and that others over time will gradually wither away. Just like 20 or 30 years ago, we used to have an alphabet soup of different networking standards, and now we just have TCP/IP.
That reminds me that I love the metric system, Paul, and we're kind of nowhere there in the U.S. Are we going to face a similar disadvantage when it comes to the global blockchain? I mean, is the U.S. regulating itself out of competition here, or not regulating itself into competition?
I worry that there is some risk of that happening. I just actually got back from 4 weeks in Asia, and it's very clear Japan, Hong Kong, Singapore, and additionally Europe and the Middle East, these are all places that are moving really forward. If we look at kind of our volume of work and deals, we're up in every sector and we're up in every geography, but the places that are growing the fastest by far in terms of our blockchain and core crypto work are Europe in preparation for the MiCA assets law, and Hong Kong, which is growing rapidly as China tries to reopen, and then obviously Dubai in the Middle East, where the regulatory environment is maturing very quickly. So the U.S. is growing again, and that part is good. And I've been telling all the people on our team, summer is coming, but we are definitely lagging compared to other regions.